Okay, everybody, welcome to the webinar we're going to conduct today. Thank you for joining us. I'm Brandon Spear. I'm the CEO of TreviPay, and I'm very excited to be joined by a Forrester Senior Analyst, Lily Varon, who will walk us through some of the results of a recent study to get a better picture of what challenges and opportunities are facing fintech leaders and really how this ties into what Forrester have identified as the future fit. Lily is a senior analyst at Forrester, serving digital business strategy professionals. Her research focuses on strategies and technologies that firms need to win, serve, and retain customers in the age of digital business. Lily, you and I have spoken several times before, so welcome and thank you for joining us today.
Thank you so much for having me. I'm excited. I always have fun talking to you, Brandon.
Yeah, it's a pretty exciting time, I think, for some of the things that are occurring in our industry, and we're really looking forward to jumping into some of the content and research that you've prepared today.
Yeah, well, let's do it. So thank you again so much for having me, and I'm equally as thrilled to kind of discuss the study, share how we saw folks optimizing their payment systems to seal the deal. We'd be kind of remiss if we didn't start with the fact that this has been a really sort of disruptive past sort of year and a half. The good news is that the lesson that we take away from this year is the lesson that we sort of have been learning slowly but surely over the course of the last decade or so, right? I mean, we certainly saw sort of the near overnight migration to all things digital and distanced and virtual. But it was a continuation, or let's say an acceleration of some of the things that, of a business environment that we have kind of been existing in for quite some time. And let me get sort of specific about this, right? So that environment is what we're sort of talking about as a technology human symbiosis, that where you have technologies like personal computers, like the internet, like mobile phones, all of these things kind of empowering consumers, empowering businesses, empowering employees, empowering partners, and companies have been invested, responded to these empowered customers with better technologies, right? Building digital capabilities and those customer experiences to meet the needs of those, increasingly empowered customers. And that hasn't stopped. So, this continuous symbiotic technology human loop that forces firms to deliver more advanced technologies and experiences. Those experiences drive more, better, drive more information, more power into the hands of the people, employees, customers, et cetera, upgrading their expectations. And it sort of increases the power of the collective, right? The power of the network. And so what do you do, when you're, where does that leave us? What do you do in this environment? What is the biggest lesson that we can take away from the last year? Well, that's that we have to, well, anyone who's been undertaking this sort of digital transformation project over the last, decade or so, that we know that finish line keeps moving, right? The disruptions keep coming. So what we're talking about at Forrester now is this idea of the future fit technology strategy. And it starts with this understanding, this need to be adaptable. What is that? Well, the adaptive enterprise has the capacity to reconfigure its underlying business concept by dramatically rethinking its core mission, its primary value proposition, its core competencies, the markets or industries in which it competes, and its end customer. And at Forrester, we've sort of built upon this, this adaptability concept and coined the term future fit. A future fit strategy is one that that is adaptive, right, to reconfigure those core business concepts, but it's also creative, that sort of it brings emotion and engagement to customer experiences, and it's resilient. It enables you to deliver on your vision and on your brand promise, no matter what comes next. So that's this sort of future fitness. That's what we mean when we talk about a future fit technology strategy. And according to our research, firms that actually have this flexible technology foundation, that have a business operating model that can change quickly, these firms grow nearly 3 times faster than their industry average. So our analysis, we created our own assessment here and found that those sort of leading edge respondents were growing at 2.7 times their industry average rate. What I think is really interesting too is that there were only 10 respondents of this sort of more than 500 participant study. There were only 10 respondents that achieved a perfect score, right? A perfect future fit score across our assessment. Those firms grew 4.25 times faster than their industry average. So this is, this adaptability concept is a really, it's a really wonderful concept and framework, but it actually has material impacts on the business if we can deliver upon it. And I wanted to take a moment to look at what impact this year has had on software purchasing, right? So we asked our purchase influencers, so these are purchase influencers within businesses across industries. We asked them, what would be most valuable to you from your vendors during a crisis? And what came out on top, the vendor's ability to be more flexible in terms of pricing, their ability to rapidly deploy solutions, those were sort of tied for first. And with nearly a third of our respondents kind of indicating each of those. And then closing out that third place was the vendor's ability to handle more of their projects, of their projects with these purchase decision makers. So it's bringing together strategy and implementation. But what that does is adds more pressure on you, the sellers, to offer different types of services, different types of support levels, certainly more adaptability and flexibility as it relates to pricing and adaptability, configurability, things that help with speed in order to deploy new products, new services, new models, et cetera, et cetera. This is what the market wants when crisis hits.
So that's incredibly interesting, Lily, and I think it in so many ways aligns with some of the things we've seen over the last 18 months. One of the big trending topics that we get faced with all the time, that we actually talk to a lot of our clients about, is this notion of embedded finance. It's often something that's really connected with B2C, and I think we have lots of great B2C examples of this. The one I always use is when you use an Uber and you step out of the car, you don't have to physically do anything for the payment to occur. It just happens in the background. So what I wanted to unpack with you a little bit is, how does this work in B2B? What are your views on B2B with respect to embedded finance? What type of role, could this play in helping the sellers? You listed some of the challenges and some of the things that are facing sellers today. But how could this potentially help them in the way they meet their customers where they are?
Well, B2B experiences are inherently often more complicated to get right in those payments experiences, right? You have maybe negotiated sales for one. You might have specific contracting, specific rules. You may have more complicated products and services, things that necessitate a bit of rating. Maybe there's chronology and time-based kind of attributes. Or there's a multitude of these things. You might have some things that are simple, or a simple subscription. It might be one-time charges and then payment and responsibility, payment responsibility rules and sort of access rules to those products and services differ based on the customer account. So you may have parent and child accounts with split billing. You may have resellers and distributors in there. So the point I'm trying to make is that the power of embedded finance in a B2B scenario is exponentially more than in a B2C scenario. It's just also that much harder, right? Because it's so much harder, if you can embed it, if it becomes seamless, if it becomes, as automated as possible, you're alleviating some real pain points, probably in for a number of reasons. But the power of that embeddedness is sort of all that more, the pain you're alleviating is all that more powerful because the B2B scenario is so much more complicated in most cases.
I think you've really nailed it, Lily. I think in many ways, sellers are more and more challenged every single day with a rising set of expectations from their customers. You listed a couple of them. We see it with some of the customers we work with today, that there's just more and more demands on being able to meet the customer exactly where they want to buy, how they want to buy, how it aligns with their procurement processes. I often describe this as, B2C is simple because there's one decision maker, there's one person who's making the choice. B2B is often way more complicated just because of the multiple stakeholders and all the various parties who have to align and who have to agree before an actual transaction occurs. So I think you're right. I think this is a pretty key and pretty valuable insight that we've seen, and I'm glad you have the same sort of point of view, that it's an ongoing challenge for sellers, and it's likely to accelerate. It's not likely to decelerate, right? Some of the things we've experienced in the last 18 months, I think, have really pulled this forward. And so what you may have had 4 or 5 years worth of time to execute around, you've now probably got to do in a much more compressed time frame.
Mm-hmm. Well, take the B2C example of Target, right? Target and curbside pickup. Target has been working on curbside pickup for a decade already, or thereabouts. So in a pandemic environment, they were able to just polish the rough edges of something they've been working on for a long time, rather than start from scratch, right? And so that's what we're starting to see with sort of the modernization of the B2B kind of order to cash or B2B payment scenario. Is we've got to start putting these pieces in place today in order to be able to become future fit, right? We need the flexible foundation. We need to recognize the creative power of having flexible payments technology, because that's what's going to set us up to survive when the hurricane, we want to be a palm tree in the hurricane. I just moved to Florida, so that's an absolute, metaphor for me. We call payments the invisible invaluable, because it is so important to the business to get this money in to impact, revenue, to improve cash flow, to operationally alleviate some friction between, there might even be politics between the sales organization and the finance organization, where the finance organization feels all doom and gloom when they have to tell sales, you can't do what you just did. This is invaluable, but it also has to happen so much more invisibly now because Uber, because of Uber, because of Amazon, because of the digital expectation or the digital experiences that customers are having anywhere in the ecosystem, not just with sort of our direct competitors. It's, our expectations are set by the best experiences we get anywhere, not just, I'm not thinking, oh, what does, the competitor of the business I'm dealing with today offer? No. It's like, why is this so hard when I can do it like this, in the next window I have open?
Yeah, that's very well said. Very well said. Okay, let's keep moving with your great content.
Yeah. Well, I think we wanted to invite our audience here to give us some information and actually create some content on the fly so that we could provide some more insight after the fact. Isn't that right?
Yeah, exactly. So we're going to conduct a series of little polls like this during the course of this presentation. We'll format all of these afterwards and present them back to all of the attendees along with the content, so that we won't disrupt the flow of the content. But we'd love you to fill in this information. You know, this is really about what payments changes you experienced and what did your buyers demand during the pandemic. And we'd like you to pick the one that is most relevant and you felt was most relevant to your experiences. And then we'll certainly share this back with everyone else once we're able to pull it all together. Whilst we're just waiting for everybody, we'll give everyone about a minute to complete this. But whilst we're doing that, you know, one of the things that we absolutely saw, and it was kind of tough to watch at the time, is, you know, a lot of small businesses had lots of working capital challenges, and a lot of the typical sources of capital that they might have used ended up drying up. And there were government funds that ended up helping out, but in a lot of ways, it was often difficult for smaller businesses to get access to those. And so we certainly saw, you know, from our point of view, the top two items there, the extension or the additional ask for more credit or extended terms, was one of the most topical things we dealt with in the last 18 months. And I think that was in part driven by just how much liquidity dried up over the pandemic period.
Absolutely.
Anyway, hopefully everyone's been able to put their vote in, and we'll keep moving on to the next topic.
Yeah, well, this is where we can sort of dive into our study. So, you know, TreviPay commissioned Forrester to do a study on the business challenges, on the priorities, on the opportunities that businesses had within payments. So we fielded a survey to about 200 director level or above decision makers, specifically in accounts receivable or in the payments sort of organizations or influencers on those decisions. And the respondents came from 6 countries. So we had in North America, we had US and Canada, we had UK, Germany, France. In Europe, we had Australia as well. And so this was a global study, which was really great to have. And as you can see on the right here, the respondents came from organizations of all different sizes, anywhere from sort of over $100 million in annual revenues to over 10 billion. And they came from a variety of industries, right? We got retail, we sort of have broader e-commerce, chemicals and metals, manufacturing, distribution, telecom. We had really good representation across a number of different industries here. So what did we find? Well, we asked you this question, sort of what were the sort of, you know, demands that you had from your customers during the pandemic? Well, we asked our respondents here to look back over the past 2 years and think about and tell us what the payment related concerns or demands they were getting from their customers and what they were. And you can see over the past 2 years, over 60% of the decision makers within our studies, they cited that the most urgent customer concerns were increased scrutiny on security and fraud, more sort of digital payment options, and more flexible terms, which makes sense given the context we've been in, right? What was interesting is when we asked them to the same question, sort of what, to be forward looking, like what do you think over the next 1 to 2 years, you know, your customers will demand of you from the payments experience. And it was really about more sort of optimizing the payments experience over the next 2 years. So sort of similarly, over 60% of respondents cited, you know, increased payment speed, increased security, and increased data privacy as sort of top of mind concerns for customers moving forward. So we went from, you know, expanding our payment options and expanding our payment terms to trying to get those processes done better and done more securely, right? Security is always in high demand and it will continue to be so moving forward.
So, one of the things that I think flows from this, and we've seen this building over the last several years, but it really became very front and center in the last 18 months, is this idea of business identity theft. I think we're all probably fairly well educated on personal identity theft these days and what it might mean. But as more and more of the way customers engage with one another for the first time, as that moves online, and so you don't necessarily, you meet each other for the first time in the online world. So this idea of knowing who the other party is, who the counterparty is, are they who they say they are, it's becoming an increasingly relevant topic. It's something that we've really had to focus on and deal with some of our clients. So I'd love to pose this back as a question for you, which is, how do we build this buyer-seller trust in this online world? But how do you think we go about establishing this way of when people meet online for the first time?
Yeah, it is. It's an important topic and a timely one, because technology is getting better at this, but it is still really hard, right? And we build rules and we build models in order to identify sort of riskier transactions, or for compliance reasons, right? The KYC and anti-money laundering, things like this. I think that the much like the payment options and digitizing payment options, the software solutions or automation that can be put into place for fraud management in the digital space in B2B is coming to fruition. This is a sort of, we already mentioned Uber, so I'd be remiss if I didn't mention Airbnb. One of the things is, when you've got a network, when you have, people on either side of a relationship, of a transaction, there can be an entity that is a broker of that trust. Now, Airbnb has helped to do this, but you've got to verify your identity as a user on Airbnb, and you've got to verify your identity as a property owner, whatever, on Airbnb. And there's, even design elements that help with this, verified accounts on either side. And so I think that there's a number of things that come into this. One is finally giving it the recognition in the space it needs, finally recognizing the software out there to help with this. But the other piece is, this is about sort of the digital customer experience as well, and embedding that kind of, however way you can do it in that sort of onboarding or ongoing commerce experience. How do you embed trust as a core part of that experience, right? Airbnb did it with verified accounts and verified identities. How might we build that into our authentication or other sort of fraud management tools, email verifications, and other things like that? But I'm curious about your thoughts here.
Yeah, I think you're spot on. So while we're having this conversation, let's kick off the next poll, because I'd love to get some feedback from the audience here as well. Whether you've seen a change in the amount of fraud that you've experienced over the last 18 months, and if you have, how did your fraud system perform? We'd love to get some feedback on that. So to your point, Lilia, I think the trick and the challenge here is you first got to recognize the problem. You first got to realize that this business identity theft notion is real, and it can be, and it's remarkable how sophisticated some of the actors are becoming here in terms of there's so much public information about companies available these days that to impersonate a company is increasingly easy to do. And so you have to be very sophisticated in how you align with, where is the request coming from for this application? Does it look like it's from the same geo zone as the company's based in? You've got to overlay with that people are working from home now. So there's all of these additional layers of complexity in getting this right. But it's a trend that I think, as more and more transactions move online, as more and more first interactions happen online, it's going to be crucial for most companies to solve. and it's not easy to solve. There's a whole, there's a significant amount of infrastructure, data infrastructure, modeling, risk analysis that needs to go into getting this right.
Right, and so many disparate parties own that data, right? How do you, in any which way, ensure that you're sort of tapped into the right networks, or looking at the data holistically so that you can attribute, well, these three things are in line, but this one thing is risky. But given the fact that these three things are in line, this one risky thing we'll choose, because our sort of appetite for risk is at this level, we'll choose to, there's a lot of configuration and kind of data management that goes into getting this right.
There's no question that's true. So thank you for filling in the poll. We'll keep moving through some of the additional content that Lily's got.
Yeah. So fraud is absolutely a core challenge that all businesses wrestle with. But we asked, we can look at some of the other kind of payment related challenges that our study uncovered here. And a whopping 93% of our respondents experienced challenges with their organization's sort of payment system or technology, 93%. And the most cited challenge was the fact that there was it took too long, that the process to do billing had way too many steps, and it took too long. More than, followed pretty closely, by the way, by the second piece here, which is the inability to support the payment methods that our customers demand. In our study, over 70% of the respondents reported that that they couldn't provide certain customer requested payment methods. It's not just the technology that stops them, but it certainly plays a big role in that. And then a lack of visibility into payments data. Sometimes it's simply because of things like poor reporting tools, or the fact, like we just talked about, that this data lives in such disparate systems that it's really hard to put together to drive insights from it. And very related to that, right? Another challenge, the fourth key challenge here, was the poor integration that their payments technology had with other technology in the stack, right? And so that forces things like manual data entry and sort of duplicating efforts, which are bad for efficiency's sake, but also bad for morale and employee satisfaction. The fifth top pain point here was the inability to support customers' desired payment terms. So as opposed to the payment methods. In fact, 55% of our respondents stated that they were unable to provide certain types of payment plans that their customers demanded, things like installments or subscriptions and things like this. And finally, despite the emphasis on this area, a quarter of the firms in our study felt like they were still easily susceptible to fraud, right? And that's a little harrowing. And we're not talking about, firms that are in the dark ages, right? Earlier we talked about how our respondents said that they, increasing the number of payment methods they accepted had been a core demand from their customers. And just now we saw that it is still a key kind of challenge for sellers. But we asked these businesses, how many payment methods do you support? And like I said, these are not sort of folks stuck in the dark ages accepting only checks or only card payments. No offense if that's your organization. But the average number of payment methods supported was nearly 5 payment methods. And that to me was quite telling, that despite all this emphasis of supporting the payment methods that customers demanded, that there was still this challenge that these sellers cited for their inability to offer some of those payment methods. And so more than half of the firms had offered, wire transfer was a big one, of course, credit cards, but there was even sort of digital wallet payments and real-time payments sneaking in here to round out some of these top payment methods. And when you look to the right here, the most offered at least 2 payment terms, so more than 50% of the respondents offered installment plans, from their own credit departments. They offered things like subscription terms or installment plans from a fintech provider, like a third-party provider. So we're not talking about really early stage kind of customers here. And so while these sellers have added these payment methods to their portfolios, they did share with us that anecdotally that there was some sort of hesitation to support some payment methods or some terms because of security concerns, the risks that they're not just don't know what they don't know, the integration complexities that come with some of the payment methods and some of the sort of follow-ups that were required for some of the payment terms. And I like the way this respondent put it was, why were you unable to offer certain payment methods is what we were asking them. And they said, because we need more tech and we need more expertise, right? We're willing to do it, we're planning to do it, but we're really trying to do it right. So there's appetite there, but it's a tough decision to make. Which brings us to this.
I think it's a great segue to the next trending topic, which is this idea of how do you meet this ongoing and ever increasing set of complexity that's coming from your customers, that's coming from the way your customers want to interact with them. I'll give you, one sort of anecdotal example that we've seen, which is it's a very simple one, but increasingly buyers are saying, if you want to get paid, you need to load your invoice into my invoice portal. And so they're shifting the burden away from their own accounts payable department to their suppliers and saying, if you want to get paid, this is what you have to do. And so I think it's one of, you can imagine if you've got hundreds of customers that make that request of you as a seller, how do you deal with that? How do you scale around that? So that's one of these examples of this convenience that the buyers want versus the complexity that it's driving inside of the seller. And so one of my questions back to you is, how do you deal with that tension that's invariably going to exist inside a business?
Yeah. Well, and the beauty is that most of these firms, let's say, are starting to focus in on optimizing the payment methods and experiences and journeys that they have, right? So I think that there's an opportunity to look at, well, on the one hand, this doesn't have to be as manual as it has been. There are solutions out there that can help kind of either with pre-established networks or connectivity or middleware that kind of facilitates some of the digital injection of these payments experiences and all the different components of it. Or that take up pieces of it. So maybe there's a long tail of, partners, of distributors, of resellers, or in other relationships that present a business opportunity to connect to, but that doesn't make sort of sense to build a one-to-one relationship with. And so, alleviating some of these things to either, finding digital solutions for them, or help you kind of focus in on those relationships. Maybe it's the tier one relationships that frankly are super strategic to the organization and merit that kind of human power, man and woman power, and them power, to that muscle to figure out, to manage that complexity, to make those decisions that make the most sense in those really strategically important kind of relationships. Whereas there's business opportunity in places where it just isn't feasible to do that. So, I kind of think that it's a balance of, of feasibility, opportunity and feasibility on a matrix, and see, plan the roadmap accordingly and look for kind of what is not feasible, look for alternatives. And that's where software comes into play. Anyway,
yeah,
kind of a roundabout way of getting
you're right.
there.
But no, I think you're spot on. And I think that leads us to our next poll question we'd like to ask the audience. This complexity that you're probably all invariably facing. I would love to hear from you what you think is front and center. What are the biggest issues that you're dealing with? And yeah, I think Lily touched on some really key concepts here. A lot of the respondents in the survey were fairly sizable companies, and if these sizable companies are experiencing challenges and they have probably significant scale, can you imagine how more difficult this gets the smaller the organization becomes? And so I think this is you framed it really well, which is if you're big enough, this might be something you can do on your own, but there's many companies that probably don't have the scale, don't have the wherewithal to figure this out, and there might be some really interesting partnering or outsourcing opportunities for them to consider to meet the customers where they want to be met, but at the same time not have to take on all of this burden themselves and do it all themselves.
Mm-hmm. Absolutely.
Okay, so hopefully everybody has had an opportunity to answer that question and to give us that feedback. Let's go on to the next section.
Yeah. So now those myriad challenges that we talked about translate into really to negative business impacts. And this was important for us to dig into is, what are the risks that are what's the consequence of having less than great kind of payments experiences and payments technologies? Over 90% of the respondents felt that felt these negative business ramifications of their organization sort of payment strategies. The topmost impact of these payment challenges is at the right here. So the one most frequently cited is this decreased customer satisfaction and the loss of sales opportunities, right? These two impacts kind of have a domino effect that lead to some of these other ones, right? They can have an impact on the rest of the business, right? It can expand to damaged brand perception, employee morale, the decrease in customer confidence, the frustrated sales reps, as I talked about before, and certainly kind of organizational and operational agility. One of the things that isn't on the slide here, but that came out in the study that I thought was really interesting was, we know that digital transformation or, this move to become more digitized, more adaptive, it's a top priority. Well, 31% of our respondents said that payment challenges actually reduced their organization's appetite for innovation or digital transformation. I thought that was really, really interesting. A negative experience with payments can actually sour an organization's motivation to try new things, right? It can diminish the confidence that these transformation efforts can yield more benefits rather than sort of challenges, right? Which is so counterproductive to this adaptive kind of future fit, framework that we already talked about. That was really interesting to me. And given all of those challenges, almost universally, our respondents reported the need to make improvements. 95% of our study said that they needed to make improvements in their payments capabilities to better serve their customers. That alone is pretty gobsmacking. And this is why we see investments in finance applications and systems and processes as the second highest sort of priority, digital transformation priority, second only to sort of sales and marketing applications and processes. And by the way, the sales applications and finance applications are getting so much more intertwined, right? As we go through some of these RevOps, transformations or these quote to cash transformations, right? So there's certainly some interplay here. But it's fascinating, right, that these investments are even more prioritized than sort of customer-facing systems or data analytics systems investments, like things where you might think or you might consider that firms are investing in. And it wasn't the case always, right? Most of the firms across industries have focused their IT processes focused their digital transformation efforts on IT processes and customer service processes. This is data not from the study TreviPay commissioned from Forrester, but from Forrester data more broadly, right? Those were the areas of their focus for digital transformation. So it struck me that today, as we asked our respondents what they focused on, that this focus has shifted to, more finance applications and sales applications, right? So, all of those payments improvements that we saw earlier in the study, right? Increasing security, getting better technology to support payment options, things like this. These are all the things that are starting to finally get the digital transformation effort or attention that they deserve. Partially, potentially, because they're recognizing that the diminished appetite for digital transformation when these things go wrong, right? So as this focus, right, moves to financial and payment systems, our respondents said that the improvements that they're going to make, right, these things like that, the better payment options, et cetera, they're looking, the benefits that those improvements will have will be things like simplified buyer experiences, right? The ability to free up working capital. We've come full circle to what Brandon was talking about earlier in our conversation. They expect reduced, time to payment, reduced DSO, and as a flip side of that, better cash flow, right? More satisfied customers. What's interesting to me is that, we asked these firms, what did you expect? And what was the realized benefit of some of the improvements that you make, right? So while, over that 90%, let's say, expected simplified buyer experiences, the only 52% realize that benefit. So what that shows to me is that there is tremendous potential still to drive payment process improvements, to provide better customer experiences, to streamline some of these operations, right? There is still a lot to be, we know what we have to do. And now we kind of have to do it, right? These are the expectations that we have to make come true, as it were, right? So this to me is actually really inspiring data about the road, the long, let's say, the runway that we have ahead of us to keep improving our payments experiences in the B2B environment.
That's tremendously insightful, Lily. I think some of that content is just invaluable in terms of framing the overall challenge. And one of the things I think that's just was brought to the fore in the last 18 months is so many of these processes were contingent on people being in the office, and people being out of the office obviously changed all of that. So I wonder how much of these accelerations and these sort of changes in emphasis have just occurred because people had to be remote, and you can often gloss over inefficiencies and challenges like this if people are together, but when they're separated, it kind of highlights if you've got any gaps.
Yeah.
Another trending topic here obviously is buy now, pay later. This has been, I guess, one of the most interesting things to watch in the consumer world over the last 2 years. I often get asked the question, buy now, pay later, what does that mean for B2B? In some ways, I always think, well, B2B has always been buy now, pay later. That's really how it's designed. But I'd love to, hear your perspective on buy now, pay later for business.
Yeah, well, even in the B2C realm, deferred payments or buy now, pay later financing wasn't new when these kind of newer buy now, pay later solutions came out. We've been doing financing in the B2C realm for a long time for larger purchases, right? But what they did differently was they adapted to the current age. They adapted to digital first sort of customer experiences and onboarding. They were much more customer centric in their messaging and in their terms, right? They emphasized simplicity, they emphasized clarity, and they emphasized from a user experience perspective, the speed, right? Don't make me give you more information than you need from me just for risk aversion purposes, right? It's part of that balance of the complexity and convenience. But so similarly, like what lesson? That's I go through that just to say, right, this wasn't a novel experience in B2C. It was just improved dramatically. And so I think that, again, it's the opportunity in B2B. This is a process that has existed. The buy now, pay later installments terms are not new, although we have the opportunity to sort of improve upon them as we've seen. What are the ways in which we can do that? Well, those are the lessons that we can take from the buy now, pay later world in B2C. It's like, what did they do? What did they focus on changing? We need to focus on changing similar things for the B2B context with all of the nods to, the complexities that we talked about earlier.
I think that's a key insight, Lily, is that it feels like it's something new, but it's really not, right? It's just a reinvention, and in so many ways, it's, if we go back to the first example I used of using an Uber, it's not a reinvention of using somebody else's transport to get from A to B. It's just completely re-engineering the way those processes are working and working in a digital first way. And so I think that's a really powerful insight. And I think something that comes through in the study, comes through in the Forrester research, that being an adaptive, flexible company that you can pivot and move to these new models and do it quickly and keep up with what your customers want, I think is absolutely key. So we've got a couple of minutes left for some Q&A, and there's a question that's come in already. It actually came in really early, right in the beginning of the presentation, which is the adaptive enterprise a framework or is it a standard? So when Forrester thinks about this, how do you think about the adaptive enterprise?
I believe it's a framework. It is. And there are multiple ways to apply it. I mean, I think that we tend to think about, I think about it as, it is the promise of digital transformation. It is, digital transformation sort of assumes a period at the end of the sentence, right? I've transformed. What the adaptive enterprise helps us do is across our, we would previously call it people, process, technology. We've got new terms for partners and platforms, and process I think is still there, practices maybe, but we take that adaptive, creative resiliency and apply it to, almost like a lens, apply it to our organization, our people, our processes, our technologies, our the platforms we use. So I see it as a framework that helps us sort of build the strategy across different components of the organization.
Makes perfect sense. We also had another question come in, which is, I'm reading a lot about AI and machine learning for credit decisioning and underwriting. Is that where I should be focusing next? So I'd love your perspective. I'm also happy to chime in on this one.
Yeah, so I think that data management is part of it's not the only problem, but it's part of a major problem in optimizing these experiences. Now, for underwriting and credit decisioning, I'm going to leave that in your for your expertise, Brandon, but I do think that, you know, when you think about how to unify a customer experience around billing and invoicing and payments and credit decisioning, you know, the disparate systems under the hood that have to control that need to be able to pass data back and forth to one another and make decisions on that data. So that's where I see kind of machine learning and really fun data science stuff having effect. So I'm all for it, but I actually think that you actually might have a better perspective on this specific question.
Well, I think it's absolutely, you know, it's a crucial part of the arsenal of what you have to have as you go forward, as you think about underwriting. You know, in general, underwriting a business, much like everything we've been talking about today, is more complex than underwriting an individual. And as a consequence of that, there isn't really even a notion of a standardized credit score for a business. So all of this is very correlated with, you know, getting the data, putting it into models, understanding what you're seeing, and then being able to do it at scale and map that back to what your risk profile is as a company. And the smaller the companies are that you interact with, by the way, the more complex this becomes. So it's, and obviously the more volume that you typically have to be working with. And so the more you have to look for patterns versus individual use cases. And obviously with things like machine learning and AI, they're incredibly good at looking at and recognizing patterns. And that's the sort of use case that you tend to see where these technologies get deployed. So I think it's a really important, really powerful part of what most companies need to be thinking about as they try to modernize, you know, future-proof, build their adaptive enterprises around these specific capabilities. We also had another question come in, which is, I'm tasked with increasing my customer experience scores, and I know our payments process is ready for updates. How can I sell this across my organization? So I think you got some really cool data that we probably just shared, which might help, but I'd love to hear your perspective on how do you sell this? How do you sell this change?
Well, it is, you know, I think that looking at some of the data, like some of the stuff from this study that says, you know, this is riskier beyond a customer experience, right? How do you get these other teams and other parts of the organization on board is by sort of helping them see the ripple effects of a bad payments experience, like the lack of appetite for digital transformation or things like that. I think a lot of folks tend to focus on the things that are easiest to measure. So things like, you know, sort of churn, DSO, things like, you know, hours spent, calls to the call center or to the you know, sales rep, you know, what are the hours, the minutes that, and how can you attribute that to a dollar value, right? That is usually what piques the eyes and ears of other folks across the organization. But I would argue that some of this is a natural extension of some of the transformation that probably is already existing in the organization, right? I think you and I have talked about this, Brandon, like this RevOps story of you know, identifying the revenue engine and driving revenue with new customers, with retaining your existing customers and extending your reach within those existing customers. Well, often that's talked about as a sales operations story or as a marketing operations story, and it excludes the payments, billing, treasury, finance organization, and I think that is a huge mistake. So I think it's partly about plugging into the where it hurts. So if the other organizations are really focused on transformation or quote to cash, or you know, you can focus on customer experience improvements, but translate those benefits into the KPIs that they might be measuring and they're responsible for.
I think that's incredibly well said. I think, you know, you're so right. Often often the macro effect is accelerating sales or improving the customer journey, but you need to unpack all the pieces where that can unravel and make sure that it all strings together. So I think unfortunately we've run out of time for answering any more questions. If there are any more questions that have come through, we'll try to answer them when we give feedback on the survey results. I just want to take this opportunity to thank Lily and the Forrester team. Lily, thank you for being on the webinar with us. Thank you for conducting the specific research that we commissioned. I think for any of you who've not read the future fit research that Forrester has done, I think it's an outstanding framework to help you think about how you organize and set up your business for success in the future. And so Lily, thanks so much for spending time with us today and sharing your thoughts and for doing the commission study for us. We really appreciate it.
Absolutely. I'm thrilled to be here, and I thought it was really you guys are asking really key questions in the study, and there's really useful data in there. So let us know if you have questions, if you want to talk through some of the results. I know Brandon and I would be keen to hear those questions. Keep them coming in, even though we can't answer them here today.
Fantastic. And thanks everybody for attending the webinar. We appreciate you attending the call as well. Thank you so much. Bye-bye, everyone.
Bye.